Although market psychology is not the only force that drives prices, it's certainly one of the most influential factors in recent weeks. As sluggish price action wasn't enough, the decentralized world was met with waves of bad news from all over the world. Politicians and bankers pushed for CBDCs in the West while criticizing Bitcoin. Elon Musk turned against crypto. And if it wasn't cliche enough, China has decided to ban crypto once again. Hello, crypto fans, and welcome to Shrimpy, your prime resource for everything decentralized. Seeing how red the market is, you may have realized that something bad occurred right at the start of the week. No, Musk didn't tweet again. However, things have indeed taken a turn for the worse as China settled on eliminating Bitcoin from its economy. For most of its existence, Bitcoin has been largely ignored by the world, but as prices reach highs never imagined before, governments have decided to push back. Why? No one knows the exact reason, but it might have to do with something related to Bitcoin's independence from banks. As a decentralized, public, and anonymous cryptocurrency, Bitcoin is a real threat to the legacy banking system. Wonder what the exact advantages of cryptocurrencies are? You can learn more by checking out our blockchain articles on the Shrimpy Academy. In fact, Shrimpy Academy explains literally everything needed to know to master cryptocurrencies. Our educational platform covers anything ranging from digital wallets, proof of work, and Ethereum to DeFi topics such as yield farming and lending. Feel free to give our academy a try. We promise that you'll enter as a beginner and leave as an expert. While news headlines may say that China banned cryptocurrencies for perhaps the 1000th time, the real truth is that the Chinese central government has rather barred banks from offering financial services that could be used for trading cryptocurrencies. Is it the same as a ban? Perhaps. But it's nothing that we haven't had the chance to see so far. Asia's Red Dragon is more famous for being a global leader in cryptocurrency investing. Most of China's billionaires use crypto stablecoins to move money in and out of the country. The central government has decided to put a stop to decentralized digital assets. Apart from offering sizable demand, China is also a major leader in supply. Chinese miners account for more than 60% of Bitcoin's hash rate, which is often deemed to be problematic as it is a sign of centralization. But for the government, the main problem is that Bitcoin miners use a significant portion of the power grid, which leads us to the next bearish story. If it wasn't enough, key crypto provinces in China, such as Sichuan, Xinjiang, Inner Mongolia, and Qinghai, have issued a ban all on crypto mining activities. Regional officials have issued declarations preventing energy companies from supplying mining farms with electricity, which in return led to distress in the Bitcoin network. Crypto Twitter is currently riddled with videos of miners shutting down their farms and relocating to other regions or countries. In one video from WeChat, China's largest social media platform, we see a group of miners shutting down entire rows of computer rigs. In another tweet shared by CNBC's senior correspondent for Beijing, we heard that a logistics firm from Zhuangzhou airlifted 6,600 pounds of Bitcoin mining machines to Maryland. Maryland is maybe better than China, but these miners should have watched our video on the top 5 crypto tax havens to get the best bang for the buck when cashing out. There are at least 10 more countries that deserve to be put on this list, but Google searches and community interests alone tell us that Malta, Hong Kong, Germany, Singapore, and Portugal are the only ones worth investigating. And while all the drama unfolds, real-time statistics show that Bitcoin faces a heavy shock. The network's hash rate reached 104 million terahash per second, a level not seen since November 2020. China's mining prohibition did in fact push prices down for the last few weeks. However, the final nail in the coffin was an announcement from the People's Bank of China, which states that banks cannot offer services that could be used for trading cryptocurrencies. Only hours later, after the central bank's announcement, China's third largest bank issued a statement saying that it prohibits its use of services for virtual currency transactions. The bank also noted that it will suspend any accounts that deal with digital assets and that the activity will be immediately reported to the government. The news led to Bitcoin dropping from $36,000 to $32,000, marking the third time that Bitcoin plunged to its low 30K support in the last 30 days. Many investors fear that this will be the last push needed to break support. Nevertheless, battle-hardened crypto veterans believe that we finally got a taste of good news and that China's push on Bitcoin is everything but bad.
Bad? This is fantastic news. I mean, it is a rite of passage for freedom technology to get banned in China. Look at Google, look at Facebook. In hindsight, were those sell signals for those stocks or were they buy signals? This means that Bitcoin is working, not that it's failing. It's making nations shiver in their boots.
If China is serious about its ban, the cryptocurrency community will see a shift in 4 key areas. First, a mining prohibition will decentralize Bitcoin's hash rate and distribute it to miners from other countries. Second, the panic over a China-controlled Bitcoin network will completely disappear. Third, the authoritarian Chinese government will lose its grip on the most important economic asset of our lifetimes. And last but not least, crypto mining will be moved to regions where renewable energy is more accessible. Michael Saylor, currently the leading Bitcoin advocate, has also shared a similar sentiment, stating that the recent Bitcoin exodus is a tragedy for China and a benefit for the rest of the world. Even though markets do not currently share the positive view, historical price data assures us that China's FUD is nothing more than temporary panic. Over the last 10 years, the Chinese central government has issued similar decisions numerous times, and so far they've never spelled catastrophe for the crypto sphere. For example, banks in China shared a similar notice in 2014, and after 7 years, nothing's really changed. Not to mention, there was no mining exodus despite the fact that banks momentarily pushed for a crypto prohibition, which means that Bitcoin's hash rate is also safe for the time being. What else is there to say? News from China may have yet again moved markets, but a renewed crypto crackdown is nothing that we haven't seen before. If anything, the recent announcements will bode well for us in the long term. What do you think? Is China's crypto ban really that bad? Or are we closer to restarting the market and introducing a brand new era to all lovers of decentralized technology? Share your thoughts in the comments below. Make sure to give this video a thumbs up and subscribe to Shrimpy for more great crypto videos.